Frank, Ivan was talking pound yen. Do you have any yen pairs that you're watching?
Yeah, so I'm actually in dollar yen and euro yen at the moment.
Okay.
The dollar yen, just because it's weak, but I think nothing's weaker than the yen right now. But I think my strongest bias would be for the euro yen, and that's mostly due to like smart money. That's what's been happening the past couple of weeks anyways, where a continued short on the yen, and then institutions just they keep buying up the euro. So I'm looking at every pullback and trying to enter when I can and take these long setups.
Yeah, and just to go back to what you were talking about there, in terms of the euro and the yen, I want to just cross those on our smart money tracker here for a second. I'll show you this. Where's the euro? Here it is. Okay, so if we're looking at the euro against the Japanese yen here, what I find really interesting is that you've got a clear difference, right, in the institutional positioning here. So we have the Japanese yen has a very high short interest. And not only does it have a short interest, it has sort of a very starkly different short interest, right? 96,000 short contracts versus 28,000. And the euro, as you just said, Frank, not only is it a very large long to short ratio, it also just got bigger. So we just had 3,300 more long contracts opened up in the latest filing, whereas we had a shrink yet again in short contracts. Is this like the third week that we've seen that, Frank, in a row?
It's been happening for a couple of weeks now. So clear pattern forming.
Yeah,
but it's cool. I didn't actually look, but they're exact opposite in ratios right now.
Yeah, it's very, very interesting.
Long, 23% short.
I love crossing them like that, Frank. You can just do the little drop down that we put in there, and then you can just select the ones you want. I mean, you can even look at other things. Also, guys, I think we had a mishap on the link. This is the correct link. If you guys want to enter that Bitcoin giveaway, click this link. Sorry, I think we might have cut it off. James, all good. Don't worry about it. There's the link for those of you guys who would like to join. Click it right there in the chat right now. That's right at the very bottom. So and maybe just to tack on a couple more things here while we're talking about it. We've got the pound, which I want to see where the pound is. The pound did have a slight increase in short positions here as of recently, as of the most recent reporting, but it's not a ginormous change. Still kind of 50-50 in terms of institutional positioning. But this is also a very big difference between where we were in terms of a couple months ago. A couple months ago, the pound was like the most shorted asset on the list. It was really, really short. So now it's come back a lot. Now it's at like 50-50. So kind of interesting on that front. Let's take a quick look at retail sentiment also while we're on the EdgeFinder.
8cap and A1 Trading are teaming up to give out free copies of the EdgeFinder. 8cap is an incredible, award-winning regulated broker looking to give traders the best experience possible. You can trade all of your favorite things like gold, Forex pairs, cryptos, indices, and more. 8cap is our favorite choice when it comes to brokers, so go try them out if you're looking for a better broker. The only thing better than trading with 8cap is using the EdgeFinder to find better trading entries while trading with 8cap, of course. So to get your free copy of the EdgeFinder, all you have to do is create a trading account with 8cap and deposit $1,000 or more. Again, just deposit $1,000 or more into your personal trading account with 8cap. Message us when you're finished and we'll get you set up with your free EdgeFinder access. Happy trading, everyone.
And what we can see here in terms of retail positioning, you've got the pound, the Aussie, and the Kiwi. Retail traders sort of poised on the short side currently. And then on the flip side, you've got dollar CAD, dollar Swiss, dollar yen. Well, dollar yen's kind of 50-50. Dollar CAD and dollar Swiss very much are being bought by retail traders. Ivan, what do you think about dollar CAD and dollar Swiss? Do you think there's a bottom anywhere nearby?
Oh, I was still in the world of euro and yen in my head, but okay, fine, I'll take it.
No, go. If you want to talk about that, yeah, finish your thoughts on it.
Yeah, like I just want to, because what is it, Stefan who asked me in chat today? Is like, I mean, like, why? I'm macroeconomics. Why? Why does things move? Why is COT so bullish on the euro? Why is it so bearish on the Japanese? It is, and why is COT so bullish, or why is it so bearish in either direction? It is because of monetary policy. It is because of ABCD reasons. Because Japan still doesn't have enough inflation. They still have a very ultra loose monetary policy where they're buying a lot of bonds, meaning they are adding a lot of their money to the economy, which makes it a very easy bet to just sell the yen. For euro, on the other hand, they have been for quite some time increasing interest rates, which Japan hasn't. They have had a lot of inflation that Japan didn't have. So there is two completely different economies and two completely different economic performances currently, and two completely different monetary policies at this point. That's why they are so different in COT data and in direction generally going higher. But USD Swissy you might ask for, I would actually argue until we get a bigger difference in monetary policy, that's when we start changing again.
Yeah, so because that dollar Swiss
range or something in the meantime, maybe bearishness.
Yeah, it's been a tough move for dollar Swiss, trading from one parity now down to 0.888, which is a substantial move on the exchange rate. So very interesting there. We haven't talked about indices yet. I want to cover my thoughts on indices here for a second, and then I'll ask Frank his as well. In terms of indices last week, we were all over the place. We continued to chop around. This is your daily chart. Here's your 4-hour chart. You can kind of see we continue to be stuck in between sort of a range where we saw a big sell-off towards the start of the last week, and then we saw continuation on the Fed meeting, and then we rebound on Friday. Frank, do you have any idea why we rebounded so sharply from that 40-80 mark? Is it just a technical move, or was there something that came out on Friday? Jobs numbers came out. Did you have any thoughts on that?
I mean, it did end up being kind of a technical move, but I think that it was a lot of the regionals or the financials in general just rallied from, the extreme sell-off from crashing regional banks, and that whole sector was dragged down with it. So that and energy kind of had a rebound Friday, and that was probably, just due to being oversold, and also that NFP came out positive, and they like good economic data. So I think honestly on the S&P, at least, it hasn't completed its move. It tends to make lower lows before coming up and making higher highs. That's what it's been doing the past month or so, and it kind of forms like a megaphone pattern. I don't really know what you would call it officially, what kind of technical term that is, but I see so price hit its lower low on that following trend line. It's probably going to come up, complete its move if it can to the somewhere above 4,200, and then probably just be range bound again. So no clear direction, but this is the pattern we've been seeing for the past month. So
yeah, I was gonna say we've been very choppy. It's been the name of the game for, I guess, the last 6 months or so. Ivan, what about you? Indices? Are you a buyer or seller? Are you neutral? Any? I know you do your monthly buys in terms of long-term investing, but we're talking active trading. Anything stick out to you on the indices?
If you do some technical analysis, bro, I don't know what you see, but I see range. I see choppiness. I see unidirectional. Somebody asked about some comments about regional banks, which again drives this. And to be honest and fair, it all depends on when is the next one going to fail and how far down are we going to go before we go back up again and even further higher. So I'm not saying I want another bank to fail kind of a thing, but it would be nice to have a lower price. to maybe get out of this range. It would be even better. But that's the reason for why we have this range. And until we get into clear water, whatever that is, that would be great. I just want a lower price, I would say. Boring. Huh?
Fair enough. Fair enough. So if we break 4,200, are you a buyer? Or like, would you, if some catalyst comes along, if we get, maybe a dovish Fed or CPI comes out a certain way, a breakout of this level, are you a buyer of the pullback, or are you just staying out of it?
Oh, if you get a break higher, I will be happy as a wagging dog with a tail. Yes, I will buy the pullback if it breaks higher. Just anything that is not a range one, I would be happy with.
Fair enough. Frank, what about you? Are you this current level? What would it take for you to be intrigued for like buys? Would it have to be a breakout into the 4,200s? Would that cause you to be a momentum buyer, or would you still just stay out of the way of that?
In this case, no. I would like a lower price on the S&P, just because of its range bound behavior. If it breaks above 4,200, by what I'm seeing and by the uncertainty in the markets right now, it's probably just going to come all the way back down. So I'm looking at lower levels. So the cheaper, the better. A breakout usually is something I like to trade, but in something like this, the stock market right now, I don't think I would buy on a break higher. I might be looking to the short side, or just wait for a discount.
Fair enough. Yeah, no, it's been a tough market to trade, and like I said, I'm kind of on the sidelines myself with the S&P. I haven't been trading it as much as I was last week. I'm out of the way of it, and I'm more intrigued right now just by watching the gold price with that COT data that we discussed earlier. I've got that gold trade from Friday. We'll see how that one wants to play out.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.